Mr. Chandra, so good having you. Thanks so much for taking the time out and joining us. Now, some of the things may be, linked to NHAI, not directly under the purview as well, but do tell us about everything that's happening. Firstly, the road, let's start off with the news at hand. The news at hand is that NHAI is going to raise about 3,900 crores through tax-free bonds. And my simple question is, there is a need for money, yes. Why such a specific amount? What will the monies be used for? What is the road construction development target for the year? Can you give us some numbers?
Yeah, we are looking at building a huge portfolio of road projects, and to develop as much as we can, while there are targets of broadly 10,000 kilometers to be done over the year 2015-16, out of which NHAI is expected to deliver road projects and award projects worth more than 5,000 kilometers, and to do more than 20 kilometers a day. We have already awarded road projects worth about 2,500 kilometers, and the rest is on the anvil. There are, as you are aware, the NHDP is a huge program, and various components of it have already been undertaken, but there are still about 15 to 20,000 kilometers worth of road projects which are at hand. Other than that, we need to do a lot of connectivity projects which will link national highways to places of tourist and pilgrimage interest, places of industrial interest and such like, and therefore government allowed us to raise bonds, tax-free bonds worth 24,000 crores for this financial year. And in the first issue that we kept for private placement, we are happy to state that we have already raised 3,872 crores on a single day, which was oversubscribed 7 times, and this is quite a historical figure because it's the first time such a large tranche has been raised through private placement of tax-free bonds. And the coupon rate for the 10-year bonds was 7.11%,
yes.
And for the 15-year bonds it was 7.28%, which is a little lower than what even others who raised similar bonds were able to obtain.
But my larger question, Mr. Chandra, would be that after this fundraising exercise, which has been a successful one, would you need to raise more funds? There were some comments about you looking to raise some 11,000 odd crores via public issue as well. Would you need to raise more funds in a hurry?
Yes. Yes, we do require those funds for the various projects, as I mentioned, which are on the anvil. And so we intend coming out with a public issue sometime towards the end of October or early November for about 11,000 crores, and the remaining tranche of 10,000 crores would be done sometime in January or February. So we are looking at those funds, and we are happy that there is a lot of interest in these tax-free bonds, and we hope to be able to do justice to the funds that we are raising.
Oh yes, they've been a big hit in the news since yesterday, Mr. Chandra. Good morning. So this 11,200 crore rupee additional sum that you're talking about, would this also be a bond issue?
Yes, this would also carry the advantage of the tax-free status which the Ministry of Finance has conferred on these bonds, and we hope to get a very good response from the public this time as well.
You've highlighted all the kind of projects that you're looking at right now. If you could give us some more details on what the order pipeline exactly is like. I know you've talked about a slew of projects which you plan to garner from the government, but give us some details. What are these orders and projects that you're talking about?
We're looking at, our projects are divided into several categories. Of course, we have the BOT projects, which are the build, operate, transfer, public-private partnership projects, which we expect to do about 1,500 kilometers. We also have a lot of EPC projects which are whose portfolio is ready with us, which we will be rolling out. And apart from that, we have a new product now which is getting ready and which requires clearance at the highest level, and that is the hybrid annuity. All these different products are, have a different scheme for risk sharing between the authority, which represents the government in this case, and the private investor or the private contractor who will be building the roads. So whereas in a traditional BOT project, the private concessionaire is taking over the larger risk of construction and of traffic and of the inflation, the hybrid annuity, for instance, kind of distributes the risk, because he would be paid 40% upfront depending on the milestones that he achieves, and 60% would be what he would be paid in terms of deferred annuities over a period of time, over a period of 15 years, biannual annuities. So as you can see that the hybrid annuity scheme, once it comes through, would be again a very positive development. And apart from this, to bring in more more predictability into the entire scheme of things, we have the EPC contracts, and a lot of companies which have done a lot of BOT projects have now evinced interest in the EPC contracts, because there is definitely more predictability, although the margin for financial players to get involved and for any kind of projections and speculative benefits is considerably reduced. So we have a large portfolio of projects which are ready.
Of course, which is true. Now, having said that, let me digress a bit. Amongst the new things that NHAI has done is that you have allowed an existing highway operator or a developer to divest 100% of his equity and therefore use the funds into another project. My question is that the basic premise? Is that a rule that if you are allowing a company to divest the 100% equity, the money that comes in from such a divestment will be used to fulfill the incomplete projects?
This has been a long-standing demand of BOT operators who are backed by large PE funds or by other companies, to be able to move over from one project after its construction to another. And government also perceived, and NHAI agreed with that, that there is such a need, because you must allow the managerial competence and the core competence of a company which may be financial in nature to move over once the construction is done. So we have a scheme now, the exit policy, which allows for companies which have already completed a BOT project to exit after 2 years and to disinvest in favor of another player, so that these funds can be liberated for investing in another project. And the entire objective is to sort of allow more investments into the BOT projects, and this has already begun to happen. We have proposals from several companies to do that, and most recently we've had that for one of our Tamil Nadu projects, where disinvestment has taken place in favor of the SBI Macquarie fund, and a lot of such proposals are likely to find fruition in the days to come. And therefore the overall outlook for PPP projects is, I think, going to be much brighter because of a more liberal exit policy.
Mr. Chandra, leave us with a number. What is your revenue target for NHAI for the year?
You know, NHAI, as you are aware, spends, has projected to spend, and that's part of our prospectus for this year, about 71,000 crores, out of which 40,000 crores will come from, are expected to come from the market borrowings, and the remaining source of funds and revenues for NHAI are the existing toll projects, which are road projects that are tolled after their completion, and the cess that we obtain as part of the government's cess policy on petroleum, on petrol and diesel.
Mr. Chandra, such a pleasure speaking with you, and thank you so much for taking time out and speaking with us today at ET Now.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.